The next learning objective is to illustrate retained earnings transactions. Now remember, retained earnings, well, let's first talk about the book's definition. The book's definition says it's amounts earned by income-producing activities and kept or retained for use in the business. My definition is similar, just worded a little bit differently. Past profits that haven't been paid out as dividends. So remember, retained earnings is an equity account. So what's the normal balance? Debit or credit? Normal balance is a credit, just like the capital account is for a sole proprietorship. So remember the definition, past profits that haven't been paid out as dividends. That means if dividends are paid, if cash dividends are paid, cash, of course, will be reduced, but retained earnings will also be reduced. So that will be important to remember when we start journalizing cash dividends later on. Now let's talk about the closing entries of a corporation. Before we do that, let's review the closing entries for a sole proprietorship. Remember the steps were R, E, I, D. R stands for revenue, close that to income summary. E, you close expenses to income summary. Now income summary at this point will hold either net income or net loss. And then you're going to close that income summary to capital. And then the D stands for draws. You're going to close the drawings to capital. And of course, drawings will make capital go down. For corporations, the steps are also REID, and they're very similar, but not exactly the same because we don't have a capital account in a corporation. So R stands for revenue. We're going to close that to income summary. E, expenses. We're going to close that to summary, income summary. And then income summary is going to be closed to retained earnings because remember, retained earnings is where we keep our retained profits. In other words, our retained net income. So income summary is going to be closed to retained earnings. And then we're going to close the cash dividends to retained earnings. So cash dividends will eventually make retained earnings go down. Now let's talk about a deficit balance. So remember, if a company earns a profit, what happens to retained earnings? Well, retained earnings contains the company's profits, so retained earnings will be increased. It'll be credited. And if a company incurs a loss, retained earnings will be debited. In other words, it will go down. So if a company has a negative balance in retained earnings, that means it has a debit balance. That's called a deficit, and it's reported as a negative amount on the balance sheet. So here we're looking at the stockholders' equity section of SmartTouch Learning, their balance sheet. And retained earnings has negative $60,000. So because this is a negative amount, we know that's a deficit amount.